Hey there, it's Jessica, and it's been a long time since I have made a video, but I have been seeing more and more stories lately about people worried about overpaying their taxes for next year and thought I would actually have something to say for once. So, here we go. So you may be seeing now that the USA tax deadline has passed of October 15th. Now as of this week in November, I am seeing a whole bunch of stories about, oh my gosh, don't overpay your taxes next year. And they're all talking about the problems that I mentioned at the end of last year, which is that the IRS is changing the rules. And now that the IRS is requiring the crypto companies to report certain things to them, it's going to affect all the crypto taxpayers. So the short version is crypto taxpayers have been on their own for reporting their crypto tax transactions because the exchanges weren't required to report anything. So they basically said, we don't know how to report it. You're just going to have to figure it out on your own. And there were a whole bunch of companies that stepped into the gap and they said, we'll help you report your stuff, import your data and your transactions, and then we'll go from there and we'll make it into something that you can turn into the IRS and report your capital gains. So that was well and good for a few years. A bunch of the softwares actually dumped everything into a big bucket, and now the IRS says that's not okay, but that's a different story that we talked about last year. You are supposed to report each exchange's transactions separately so that if you move something into an exchange, it has a certain cost basis, and then when you sell it, it's going to have that cost basis used as the value that you figure out your gains and losses with depending on the tax method you choose, as usual, the more specific ones being first in, first out, highest in, first out, last in, first out, or any other kind of transaction, any other kind of way to identify it that is called specific ID. Okay, so you can use specific ID to report it, but as of January 1st, you were supposed to declare to somebody or have your exchanges verify that you're using a particular method before you do the transaction. So every time you dispose of crypto, you're supposed to have in place as of January 1st, 2025, some kind of statement or something that says, I'm choosing to use last in, first out as my cost basis method instead of the default method, which is first in, first out. Now, of course, the IRS wants you to use first in, first out because they get the most money. If you bought Bitcoin in 2016 and it was worth, I don't know what it was then, but like $1,000 each, and now you're selling it for 100,000, they're going to realize a lot more gains, and that means they're going to collect more taxes. If you're reporting last in, first out, you may have bought Bitcoin a month ago when it was 120,000 and now it's circling 100,000. So you actually have a $20,000 loss. That means less taxes for the IRS. The IRS would much rather have you report first in, first out. And therefore, if you're not following the rules, they say you default to first in, first out. That was one of the big things that we talked about last year at the end of the year. It was a big deal. But what I'm seeing now is people talking about the new 1099 DA. So the 1099 DA is the form that they're going to use in the United States for crypto tax reporting. And it's DA standing for digital assets, and the 1099 being just like all the other 1099s you get for various kinds of income. And they're going to phase this in. So I was trading, remember back in the day when they started requiring the brokerages to report your stock transactions, and they phased it in over a couple of years. So the first year it was like they reported the sales amount to the IRS, but they didn't report the cost basis. And then the next year they were required to report the cost basis and the sales amount. And then the following year, I think they added in the steps for options. And then the following year after that, the other step for options. So it was phased in over for like 4 years. And that was well and good. They're doing the same thing with the crypto. The big difference being that most brokerages, you're not moving your money around. So a brokerage, when you buy Amazon inside your brokerage and then you sell Amazon later, the brokerage knows exactly how much you paid for it in 99% of the cases. There's not a lot of people who are moving assets from one place to another. which means there's not a lot of opportunity for the cost basis to get lost, which means you'll probably have the correct numbers being reported to you by your brokerage, whether or not they're telling the IRS at that point. So at that point, they might not have been telling the IRS the cost basis, but they certainly were giving you a form that said, this is the cost, this is the date you bought it, this is how much it was worth, this is the date you sold it, this is how much it's worth. We're reporting this part, which is why it's in this section of the form, and all was happy and well. Crypto is really different from a lot of people. Now, if you're one of those investors who put some money in Coinbase, you bought some coins, you sold some coins, you bought some more and sold some more. Coinbase knows what your coins are worth. And so Coinbase probably at the end of this year is going to give you a statement that says, here's your cost basis, here's your proceeds, but we're only reporting the proceeds to the IRS this year. Okay. The problem being that if they're only reporting the proceeds, that's what the IRS gets. If you don't report those proceeds, the IRS says, we have a statement here from Coinbase that says Jessica had sales in Coinbase and she didn't put them on her taxes. Now they have a reason to come audit me and come after me and impose all kinds of penalties and consequences, and that's terrible. But the clickbait headlines that I am seeing in the videos this week are talking about even more. So number one, you want to make sure that Coinbase knows where your crypto came from, especially if you moved it from somewhere else into Coinbase and then sold it. So if you bought it in Kraken and you move it into Coinbase, you want to make sure that either Coinbase figures out what the cost basis is, maybe because you tell them, but they're not going to tell the IRS. If it was not their transaction, they are not going to report it to the IRS. So it's still up to the taxpayer to make sure that your cost basis is getting reported. That's step one. But the next step is you want to so you want to make sure that your cost basis is reported. You want to make sure that you tell the Coinbase that you're using whatever method you're using. What I'm seeing in the clickbait headlines is that the exchanges not only are going to report sales, but they're also may be required to report withdrawals. Meaning that if you sell crypto in Coinbase, they'll report that. But if you send it to your Trezor or your Ledger wallet, they're also going to report that. And I'm also seeing clickbait examples of they're going to have to report the address that these digital assets were sent to when they were withdrawn. So I don't know. This is all rumor at this point. I haven't actually done any official research and looked up if there's um, on the form yet, if there is that info that needs to be filled out. I don't think it's going to be required this year, but it is coming, supposedly, according to these guys. And if that's true, then I have a message for those of you who are friends of mine who think that you don't need to report your crypto. And it's going to get harder and harder the world over not to report your crypto. So if the IRS is requiring that Coinbase tells them whenever you send crypto somewhere, and they're requiring that the address be supplied. That means that the IRS can then go look at that address and say, huh, we see that that address sent crypto somewhere else, or that address traded for something else. Huh, we see $1 million worth of transactions in here, and we're not seeing any transactions on Jessica's taxes. So then again, it's opening the door for them to come after me. And certainly, if you're doing $5, $10 transactions, it's probably not going to matter. Are they really going to spend the resources to come after you at that point? But if you are an actually successful trader and or you bought crypto at the right time, you held on to it, now it's sitting in your Trezor wallet, you decide to sell it, you maybe do it on a DeFi exchange, which is not reporting to the IRS. And then the IRS says, well, Coinbase said that this was sent to that wallet, and that wallet just traded $1 million worth of Bitcoin. Hmm. So this is the message that I think people need to know, especially those people who think that they can hide their transactions. I'm not sure how much longer that's going to be possible. And certainly, I have been seeing a lot of stories lately also about if you haven't reported in the past. There are amnesty programs and They much prefer it if you turn yourself in, and they're more willing to work with you on how to get yourself caught up on your taxes, how to get yourself justified or rectified or whatever, so that you get to the point where you're not in trouble. They're much more willing to do that if they haven't caught you. If they have caught you and you start sending, saying, "Oh no, I need help," and da 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 da, they're not going to be as forgiving. So, this is step one. And the other thing I've been pointing out is that people need to track where their stuff is going. Because if you get into a situation, I have a client who is buying property somewhere, and I forget which country it is, but this country wants to know exactly where his funds are coming from. And he's using crypto funds that he has grown. He did really well trading. He turned little bits of crypto into big piles of money. And now he wants to use some of that money to diversify and get into real estate or whatever he's doing. And so he came to me and said, I need to report the funds that were being sent to this for this purchase. They want traceable. They want to know where it came from. They want to know that it's not coming from North Korea or from money laundering or supporting the Russians or whatever other bad country is on the bad list right now. So it's going to be more and more important, especially if everything is on the internet. That means almost everything is traceable either through the centralized exchanges themselves, which the government can go into the centralized exchange and say, hand over your records because they're subject to government interference, or they are going to be able to trace it on the public blockchain. I have enough experience with the blockchain to tell you that I can find things that my clients have lost. I can't always tell where they end up. I can't tell what that address is that they ended up because it's a series of letters and numbers, which they call pseudonymous. But I can tell you that it ended up there, and then I can ask them questions to try to help them remember. But if the IRS is coming after them, if some government agency, whoever is going to do this, is going to come after them, yeah, they could get in trouble. So, point being that if you are not going to report your crypto transactions on your taxes, I would be really careful. If you are realizing, as I am, that this is getting into being more and more of a serious situation, and you need help, certainly reach out. We have do-it-yourself programs, we have done-for-you programs, big premium packages where we clean up everything for you. So that's always an option. The other thing to keep in mind is that when you get these forms, they're going to come and they're going to say, okay, Jessica sold $1 million of Bitcoin, and not report what my cost basis was. So you need to have really clear records that show what your cost basis is, especially if you're going to turn them into the IRS. And because if they go and do any research and discover that maybe you also had assets over here, and maybe those are the ones that should have been reported, and da 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 da, you want to have everything clean. So if that's you, reach out. And if you have any questions about this, I'm sure it will be an ongoing discussion. There's at least a few stories that came out this week that are all about don't overpay your crypto taxes, the new 1099 DA form. So there's definitely some stories about it. And if you want to find out more, comment below, like the video, research it, come talk to us, and we'll see you around.